All right. Yeah, what the hell? Shitty, degenerate users. All right, well, then let's just get right to work. I don't have my other setup, so I'm just on my laptop, one screen, so it's kind of a pain in the ass. All right, so TradingView. It's one of the things I said we go over. So we could talk about. I didn't even know I had all these alerts set up. Whoa, I had a bunch more than I thought. Here are some alerts I have for MACD, on GRS. You can set up whatever. We'll go over that in a minute. All right, so if you guys don't use TradingView, you want to sign up for an account. There's benefits to having an account even without a paid account. It's still good to have an account because you can save stuff. You can save your charts and access them later, even though sometimes TradingView decides to erase charts that you spent 3 hours working on out of nowhere because they're assholes. But here you have a bunch of the top authors. You can see a bunch of their charts and their posts when they have trading ideas, so that's obviously really helpful. This is mainly for stock, forex, and coins, or it's for all three, as opposed to just being for crypto or anything like that. Here's an example of some of the trading ideas. We obviously post them all the time for those who aren't familiar. There's also a lot of news. So it's a really good tool for the charting side of things. You have go to charts. This is various saved layouts that I have. If I hit that, it's just going to bring up one of these windows. So this is Bitcoin chart, for instance. And your drawing tools over here on the left. Up top, you have what interval you're looking at, whether it's 1 minute, 15 minute, and you can zoom in and out with your mouse. Hit this button here, change what kind of candles you're seeing. Indicators. This is where you would select MACD or RSI, exponential moving average. In a free account, you can only have one indicator at a time. I can have more. I can have as many as I want, I believe. So in this case, I just have RSI because that's all I really care about right now. And I also have EMA. I usually actually have other ones, but I must have deleted them by mistake. But we don't need them right now, so that's fine. The replay option is really cool. You can go back. Let's see, jump to right here. And now it'll show the progression. Let's do play. And now it shows the progression of kind of what happened, which is really helpful to see it faster. If you wanted to go back and try different trading strategies, okay, if I employed this trading strategy and I put a buy here and a sell here and I did this wave count, how well would it have been predicting what actually happened? And then you can play through. And it's a really, really cool feature. This shows that was my chart before we started coming down, obviously. So it ended up being very accurate. I was a little bit early on the bounce, but marginally so. And then we continued back down. So that was actually a very good wave count for this correction. We're getting down to the end of it now. I don't need to keep doing that. And we're in that support zone. So I'm anxious to see what's going to happen here. We could get a bounce sooner rather than later. A lot of guys are thinking we're going to keep going for a while. So I'm curious to see how it plays out. I expect, originally I thought we'd go to 382. We're obviously past that. The next support is going to be the 50% Fibonacci retracement. It's one of the things we'll touch on very briefly today. We'll go in more in depth another time when I can schedule it a couple days in advance. More people can come and participate. But that's your next support. If you have one support that you break through, then the next support is what you look for the next potential bounce, and that's obviously key for stop losses. So just to get an idea of where those supports are and how I arrive at that, so you can figure out where to do your stop losses. If something's coming down, you could have your stop loss below the 382 right here. And the reason you're doing that is because if it breaks the 382, you know the next stop is most likely at the next support, which is going to be 0.5 fib. So by having a stop loss order right below that 382, you get to sell once it breaks before it drops all the way down to that next support level. in order to figure out where these supports are, there's a few things that we have that we can use. In this case, I have Fibonacci, so if I zoom out a little bit, let me go to the hourly chart, and I'm going to go back to different time. As far as I can zoom out. There's so much shit open, and the live streaming is slowing everything down. All right, here we go. So let's pick a good spot where I don't have shit in the way. Let's go right here. All right, so let's say we have a big move from right here up to here. We could take the whole thing. You want to go from the lowest low to the highest high of this particular sequence. Fibonacci is going to be up here. You have Pitchfork, a bunch of other cool tools. Really the only two that I use. I use Pitchfork every once in a while. For the most part, I limit it to the retracement and extension tool. So for the retracement tool, which is all we're just going to do for today, you start at the bottom, click there, then you go all the way up to the top. Sometimes you actually don't include wicks. There's certain circumstances where you definitely have to. You pretty much always do, but it's more that you always do, and then there's circumstances where you don't have to. For us, right here, it doesn't matter. We'll include the wick. But you could go, once you have it and you figure out, all right, that's at 79.15, you can go further down. So that way you're able to get your numbers to appear further to the right, and you get the lines to extend a little bit, so it's easier to see what's going on as you're looking down chart to the right a bit. And then just a little hint, over here, this pop-up, if you select this line, you get this little pop-up. If you select any of the Fibonacci areas that selects that particular drawing item, you get a little pop-up with the most important settings. You want to hit the lock icon. That locks it, so if I hit it, it won't move it around. If you don't have that and you're accidentally moving around the screen and you hit something like that, well, now it moves and you don't know where it was and the whole thing's thrown off. So I'm going to undo that. All right, so now the Fibonacci is locked in. And now you can see, so from the bottom here to the top here, we are ready to go. Imagine we were right here. This is where we were. We just had this big spike. We started coming down a little bit, and we want to figure out where to put our stop losses in case we keep dropping down. So you'll look, all right, well, there's 382 would be a good initial stop before we get a bounce. Let's also see if there's other supports there. But initially, just looking at it right now, you can see that the 382 got broken very easily, very quickly. But then look what happened. It hit the 0.5. Went straight down to the 0.5 and bounced from there. It's a perfect illustration of what you want to see. You want to be able to place a stop loss and know that if you're going to break the 382, you could have a stop loss just below it. Because if it breaks your 382 retracement, it's going to break your stop loss and keep going all the way down to 5,400. That would have saved you a tremendous amount of money by having the stop loss there. If you're just arbitrarily placing it somewhere, you may get stopped out early, you may get stopped out late. If it's arbitrary, your profit and loss are going to be arbitrary. Who knows what you're going to make or what you're going to lose? So you definitely need to target the stuff well and be as accurate as you possibly can using these tools. So here we have a perfect example where it came back down to the 50% retracement, but you can double check other things too. So here you have another spot here. That was another reversal. Another spot here. It dipped a little below, but that was another reversal. So this 0.5 is pretty fucking strong. That's a reliable predictor of a reversal. So you should know there's a much higher probability that you're going to bounce on this 0.5 than anywhere else because everything else got broken through. Here it came through a little bit on this 0.382 on the way up. It bounced right here and then it broke through third time's a charm, but it did move around a little bit in that area and had like a mini bounce, but it wasn't nearly as strong and consistent as the 0.5 retracement. But you can draw these things anywhere, and the way Fibonacci works, these numbers always apply. It's a self-fulfilling prophecy, so we trade on Fibonacci, so the algos trade on Fibonacci, and because the algos trade on Fibonacci, we trade on Fibonacci, and around it goes. If we didn't have algo trading, then we probably wouldn't see such strong action at these fib lines because our trading can't be consistent enough to actually produce an effect on the market where we bounce regularly at those exact locations. But it can be precise when you have algos doing the trading because a computer is always going to be at the exact same place as all the other computers running similar operations. So you want to look for areas. You always want to look left and try to find areas where there's been a reversal or there's been a substantial indication of support. In this case, we have several instances where we bounced off the line or found support on that line. Next step is going to be looking for other possible supports or resistances that aren't necessarily I can't breathe, on the fib line. Sometimes you do find them. So you have the crosshairs where your screen, based on where your mouse is, your trading view screen will show you an up, down, and left, right line. You can move that around and just try to look for areas where you see across the price action some consistency. If I didn't have this fib line right here, it's I don't want to have to redraw it, but if I didn't have that there, when I held my mouse here, I would see right here, right here, right here. I would see pretty strong supports, so I would have picked that location regardless. But you could actually figure out, all right, well, there's a little window here that's a whole zone where you have more support, and that would happen if you move your mouse up here and you see, well, there's also 3 locations here where it bounced. In this case, we don't really have that, but if we did, that would be a good indicator. This is another one where there's a few locations here and over here where it bounced right there, but it's not that consistent. It's only 2 times. We don't have that many instances of support there. So there's really nothing on the way down. If you end up right here, there's nothing before you get down to the 0.5 retracement where you really see that much support. This one has a little bit, so I probably would have shot for the 382 for a bounce. If it passed beyond that, you have your stop loss, it sells off, then it keeps going down to the 0.5. Guess where you would buy back in? You're going to want to see confirmation and actually have a bounce, but that's exactly what you want. If we zoom in, say we were actively day trading this, and I don't advocate day trading. You could obviously lose a lot day trading if you aren't very good at it, you don't know exactly what you're doing. But if you were day trading, just so you understand the concepts, we would have come down here, bounced off that 0.5. Say you're watching it closely and you get a nice little bounce here and it shoots back up from 5,400 to 5,600. All right, great. That's confirmation. Now we can buy back in. If you're not paying attention and looking specifically for that point, you may buy back in at some other random time when you don't really have a justification for doing so because you're not bouncing off a support. You could have been coming down here and seen this big green candle and said, oh, that's support. 2 green candles in a row. That's a really big one. That's confirmation. That's buy. And you bought at the top there, and then it just kept going down. So it's critical, not just for stop loss and stop loss based strategies like mine, but to know when to buy in and to enter the market, you need to be able to identify these supports and resistances if you're looking for areas where the price is going to get stopped. So this is a perfect example. It bounces off of here. You could buy back in, and it ended up coming up and back down to that point, but it did continue up from there. And if it did break down, so if we did have a bit of a fake out, we bounce off the 0.5, comes back up to the 382, then it gets rejected and shoots all the way down to here. Obviously, the play didn't work out, but more often than not, if you were to buy right after we bounce from the 0.5, or if it were to happen to be down here, wherever, if you were to buy right then, that's your best chance of placing your buy at an optimal location where you're going to see a strong continued reversal. Obviously, things move back and forth and go up and down, so it's never going to be perfect. So that's the idea behind your supports and using Fibonacci to find those supports, and also manually finding them, just looking at spots where you see a bunch of reversals. So here's an example. If we're trading short term and I'm looking in this general area here, I could say, all right, well, there was a double bottom here. Where are we going to find some resistance on the way back up? You can figure, all right, well, we already have Fibonacci drawn, so here's the 23.6% Fibonacci retracement. So we're going to bounce off of here, get the double bottom, and then we're coming back up. We might get some resistance right at that 236. It was a little below the 236, but still a general range in these cases, or in all cases, is totally acceptable. So you hit that 236 and bounce down. We reversed and came back up. Again, hit that 236 and bounced down. Third time's a charm. We got a nice strong candle and a little spike, mini spike in volume. That was able to push us through that resistance. Now, resistances generally aren't as strong. So you get Fibonacci supports are stronger than resistance from Fibonacci. So it's easier to break through on the way up than it is to drop down, because you have those algos that sell off or buy back based on the way down. But they don't sell off just because you're approaching a Fibonacci, because you don't really care as much because you're more open-ended. In the case of falling down, you want to get out as soon as you can and as close to the bottom as possible. So in this case, if you were to be a little bit closer in and just hold your mouse, you would see, even if we didn't have that 236 right here, just holding your mouse over it, you can see there's a couple spots where it reverses. Is right there, and then over here again, although that's more of a general range. But you would know, even without this red line, that that's an area of some resistance. It also serves as support in some cases. Right here, it's resistance. We keep moving up. And same thing, we're kind of hovering around this support. Now, that's not based on Fibonacci. That's based on finding a support where you see a lot of activity, which can go very far back. If I zoom all the way out, this support line could be based on some newer price activity. In this case, it's actually from newer stuff, I believe. So I use the line tool, which is all the way up here. Trend line, you click on the start and the stop. So you draw it like that. But the horizontal line, you just pick the spot that you want it and click it, and it goes all the way across. So I just did that quickly, but you can see there was a support right here. There was a resistance here where it got rejected right there. So that's a very good spot to expect future support and resistance. It's not super strong, but there were a few spots on the way up here that you had some reversal activity there. So that's very important to be able to find those support and resistance zones without having Fibonacci all the time. You want to be able to figure it out just from the price action by itself, and then use Fibonacci to confirm, or vice versa. You can use Fibonacci first and then determine which are the strongest Fib levels. So here, there wasn't a very good spot on this bottom support. There wasn't a very good spot over here that I was just trying to show you, because the horizontal line tool draws it across the whole chart. I didn't actually draw it back there because there was no good spot to have it. But if you look further down the line, again, this continues. Bam, 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 bam. You guys see that? This is actually, that support, I believe, the bottom one, was this one where there was a little range here, a little one there, a little one there. Not super strong. But then you keep going, and this could be like a month down the line. In this case, that was in February, and now we're in March. And again, that exact same location is serving as a very strong support and resistance for reversals that can help you predict exactly what's going to happen. So if you follow this line all the way down, that's right below our 618. They're not always on point, but they get generally pretty close. So in here, this retracement was from the bottom down here all the way to the top right here. And that's where I got these areas here of possible support that I noted. So this Fibonacci retracement tool tells us that most likely spot where we're going to see support was 382, but if it breaks past that, that's why I have this new line starting, then the next spot's going to be the 0.5. I think we could definitely see a bounce here on the 0.5. It is possible we keep moving down. Guess where the next stop is if we break past the 0.5? It's going to be 618. So if we bounce at 0.5, we're good. We're not going to get stopped out. But if we take 0.5 as 8,200, if we put a stop loss at 8,150, $50 below the 0.5 retracement, it's a pretty good placement. If we break this 8,200 level, then most likely we're going down to 618, so we get stopped out and we save a bit of money. If it bounces off the 0.5, then we don't even get stopped out because it doesn't break that line to reach us. The only issue in these cases is sometimes it's a range. Like I said, it goes a little above and a little below. So you have to look left. When I say look left, it literally means just scroll to the left and see what's happened in the past. This particular support doesn't often have a very, very strict adherence to the price action. So a lot of the times you'll have it go a little above or a little below. This one actually is pretty good if you go back. There's a bounce, there's a bounce, there's resistance, there's resistance, there's resistance. But in all of those cases on this one specific support line, this one came down below. That was a little below, a little below. This was a little above. This resistance was a little above the line. That's why I draw a zone and say, all right, well, some of them go all the way up to there, some go down to here. So that plus or minus $50 around that resistance, that's our support zone as opposed to having a very strict line. So in this case, guess where you'd want to put your stop loss? Outside of that zone, because it could still bounce inside the zone as we've seen before. That covers that. That's pretty much it for the stop loss and finding resistance. That's for at least right now. That's what I wanted to go over. We could always do it in more depth later. We have a couple potential reversals here. So we're right on the support right now. Then we have the rest of the support zone, which really should extend down to the 0.5 right there. So if it goes a little bit further than this line, we still have a chance to bounce on the 0.5. I can then put a stop loss down here below that 0.5. So if we break through that, since the next stop's 77.90, we'll have an opportunity to exit out. So the other thing we were talking about before is if you get stopped out of your alts and you're in all Bitcoin, what do you do if Bitcoin's crashing, since you can't set a stop loss for Bitcoin because you don't have it until you get stopped out of your alts? And that's where alerts come in. One of the most important features of TradingView is alerts. So in this instance, say I'm in a bunch of alts, and if I get stopped out of those alts and I end up with a bunch of Bitcoin, I'm going to want to know that Bitcoin's crashing so I can jump on. Since I don't have a stop loss order on it, a stop limit order, I want to get an alert so I can quickly open up my app and I can sell my Bitcoin to Tether. In this case, you could pick your location of where you want to be notified and hit the little plus sign over here in the price action. There's other ways to enable alerts. You could do it from the top of the screen up here. For our purposes, you can select the price and then hit the plus sign there. We're going to add an alert. Now you see the little triangle. There's an active alert. If BTC USD crosses 83.10, then we're getting an alert. I'm going to move that down so we don't delete that actually. Instead, just for illustrating it, I'm going to go further down, add alert. Now I double click on that. Again, I can click it from the top of the screen. The condition is we're using BTC USD price action. The screen we're on also has an EMA. It also has RSI and volume, so you can specify RSI, EMA, whatever you want. That's what you want the alert for. So we want the alert for volume when it exceeds a certain level or when it goes up by a certain percentage. So here we have BTC when it crosses a certain price. You can also have when it goes up a certain percentage, down a certain percentage. If it moves down more than 3% over the course of 2 hours, since we're on the hourly chart here, how many bars? That'd be 2 candles. Then we want to get one alert. As soon as that condition is met, as soon as it hits 3% down over 2 hours, 2 1-hour candles. We're going to get one alert. You could also set it to give yourself an alert for each of the 2 bars, or once every minute, whatever you feel like you need. If it doesn't happen by a certain time, say by tomorrow at 10 p.m., it's not going to happen at all. We're going to cancel the alert. It's no longer valid. We're not going to get alerted anymore. So you can set an expiration time. You could also have it give you a pop-up on the screen, play a pretty loud sound, which is what I use when I'm home. My computer's pretty loud, so if it hits my alarm, the 3-note reverb sound will wake me up in the middle of the night even. And then beyond that, you can have it send you an email or do a text to your phone. So I can only do email through here. I don't get text. I do it through emails because I don't have the highest level of pro account. But even with the basic account, you can get one alarm, one alert. I can have a bunch more active at any point in time, but you'll have at least one if you choose to use a free account. You can also set what message you want to see. So I'm going to get that alert in my email and as the pop-up on the screen. So I know to buy the fucking dip. And that's alerts, and that's the most important feature that you guys would probably ever want to use in TradingView, more so than using Fibonacci or anything. Alerts are huge, and you don't have to get a separate app for it. You can use it right in your same charting software. Just as an aside, if you look down here at the RSI, it's getting really low. It's in oversold range. It's down around 20. So we're getting very close to bounce potential. So it sort of coincides perfectly with this region that I have colored in as the support zone. If I didn't have any of this information, purely based on the RSI being oversold, I would say we're probably getting pretty close to a potential bounce. The fact that we have both of these indicators matching up simultaneously, my support zone plus the low RSI, that makes it even more likely that we're going to see a bounce. We're also starting to see some slight bullish divergence down here. Not too significant, but slight. It will pick up. So it's possible if this keeps moving up right here, then that's going to serve as a bullish divergence, and that'll give us a positive outlook. So if this line's going up here while the price action's still coming down, that means we're getting close to a reversal. That's what happens when you get bullish divergence. It's predicting a reversal. All right, so that's the main stuff I wanted to go over in TradingView. What was the other thing? Profit loss tool. It's a good tool to use. So this tool here, you could do it for shorts or for longs. This is short meaning short selling, long meaning long positions and buying for future price increases. So by default, this button has the long position. So if I click that and I say, all right, if I buy right here and I sell up back at the top of that Fibonacci, our top from before, I'm going to move this out and figure, all right, I'm going to want to see what my profit would be on this trade. This is what I did with ONT. So with ONT, I said, all right, we're going to buy right here, and my target's all the way up here at 10,000. My stop loss, I'm going to set my stop loss. I'm going to risk 2.5%. I'm going to move this here until I get this percentage to 2.5%. Now my stop loss is 2.5, and this is my trade. So if this is my trade, this is my buy-in, the bottom is my stop loss, the top is my target. This is telling me that my stop loss is minus 2.5%. It's $213 below where it currently is. It tells me that my target up top is would represent a 20% gain. These other numbers are irrelevant. But it's saying this is a 20% gain, and the target is $1,660 above my buy-in price. In the center here, this tells you what your RRR is, which is your risk over reward ratio, is 7.76. So if this plays out and we have our gains of 20%, we're making 7.76 times as much money as we would have lost if it had broken down and hit our stop loss. So it's a very useful tool. If you can get an RR that's above 5, it's good. If you can get it above 10, it's phenomenal. And if cases like my ONT trade, it was up at 77, which is like ridiculous. But it played out 220% gains, and my stop loss gave me a risk that was never more than 6%. I think the highest stop loss, the highest risk I had at any point was like 7.2% for 220% gains. It was an amazing trade, very profitable for all of you guys and myself. So if we could replicate that someday, I'll be very happy. We're doing a pretty damn good job with Knowles right now, but it's obviously not as well planned as ONT, where I said, do not sell it, just buy it and hold it. Over the next 10 to 14 days, we're going to make 200%, and sure enough, we did. Hopefully, we can get another one of those. All right, that's it. That's everything I wanted to cover in here, just for an intro to TradingView. And alerts. That's pretty much the gist of it. When you're in TradingView, all the way in the right here, the little magnifying glass gives you this screen which has your watch list. You could type in here, DRGN for Dragon. Well, that's a stock. So some they don't have. So in this case, they don't have a coin. So this has the stock. This TradingView doesn't have the data from KuCoin. It only has Binance and Bittrex. In some cases, for the larger majors, it has Bitfinex and BitMEX and stuff like that. But mostly, if you're doing alts, you're going to want to pull the data from Binance or Bittrex. So if I were to put in XLM, it's going to show me there's some stocks that have the same ticker. We want to find crypto, obviously. So here's crypto Binance for XLM BTC. So that's Stellar Bitcoin pairing. You could also do the Stellar Ethereum pairing from Bittrex. That's where it's pulling the data from. So if you see a lot of activity and a big pump on Binance, but that same pump isn't occurring on Bittrex because it's just a pump and dump, you won't see it at all on this chart. You would only see it if you're pulling that data from the Binance one. So you can add whichever one you want. Those appear in your watch list, and then you can switch between coins as you see fit. In this case, I have BQX here. That's still been going down, but it hasn't dropped too much. So I did get stopped out up here, but I haven't bought back in. I'm not going to buy back in until I not only get above my original stop, but probably get some movement up into here, maybe around 45.5 or so, before I'd be comfortable buying back in. EBST obviously crashed. That's been dead. This is XVG. Exploded. Lunar is... Oh, it just made another move up. That's beautiful. All right. I'm doing very well on Lunar. I got back in down here after I had sold everything to Tether. I switched back to BTC and then went into back into two alts, Lunar and Knowles, and nothing else. And now we're moving up again. We can get another leg here. We could push back up. That would be really nice. This old wave count doesn't apply anymore, obviously. That would make no sense. It's completely invalidated when we crashed. All right, and then Knowles, of course, is completely and utterly mooning again because that's what happens when I ask it to do so. This is just absurd at this point. Lunar and Knowles have netted me more today than most people have made the entire week, given all the sell-offs we've had. I'm impressed myself at what Knowles has been doing, so I obviously expected it to do very well. I didn't predict it to be so explosive. I mean, it's just kind of, it's like I was joking earlier that it's just comical at this point, where I posted on Twitter about 70 seconds before this green candle started. It's going to move any second. I feel it's about to happen, and we're going to run right up to 52, and then we hit 51.9, like 5 candles later. It was nuts. So Knowles is making really big moves right now. I have a long-term bag and a short-term bag. The short-term bag I'll probably sell if we get up to 60,000 sats. I'll sell everything I have left. I might take profits and sell 25 to 50% of my remaining short-term bag at 56, maybe even 55.5 coming up right here. BQX we already looked at. Loom is still way down. Again, same thing with Loom. I got stopped out. I like it long term, but I'm not going to buy back in until we're well back into our old territory. Then I'll consider buying back in, but only after I do a fresh TA and get a good idea of what a possible target could be. That's it. That covers everything. that I wanted to go over today. Don't really have time to do TA requests, but we can do that in the next day or two. Anybody have any questions about the stuff we went over? Anybody there?
Hey Jesse,
Hey,
um, did you record this?
yeah,
Can we review it?
yeah.
Oh, that would be awesome. I would love to review it.
It was pretty badass, wasn't
Yeah.
it? It's a good point from Marcel. They said don't use round numbers for your stop loss. It goes without saying, but it's definitely worth mentioning. Don't use 6,000 for a stop loss. 59.92 would be much better. You don't want to be where everybody else is. Then some people might not get filled. There could be a bunch of issues with that. So you definitely don't want to use perfectly round numbers. It also interferes with what algos might be doing. So try to be unique, even if it means changing it by 2 sats. And definitely don't copy other people's stop losses.
Good tip.
Change the candle chart into a line once in a while. It cleans up everything. On top of the other, use the tab bar. Yeah, they were saying if you're in here, use the tab bar to go to the next coin. I think that's what they were saying. That's not really too relevant. I do spacebar will move you down to the next one. But okay, that's that. Why don't instead of bothering taking questions now, let's you guys can watch it again, slow it down. I know I sped through a bunch of stuff, and then tomorrow we'll do a voice chat while I'm driving down to New York because I'll have 3 hours to kill, and we can answer some questions and go